Welcome to another technical analysis video. This is our daily stock trading series. My name is Eric Lewis, and today we're going to take a look at 3M Company. And today, of course, is December the 3rd, 2019. And if you would, and if you haven't joined or subscribed to this channel, definitely click the subscribe button so that you're alerted when I make new videos. But let's dive into 3M. So here's a look at the 1-year chart rather. We've got a significant price gap on an earnings back in April. Fell from, roughly 219 all the way down to the 199, and then probably closed that day significantly lower. So reached all the way down to 189 and change. So we've seen some big moves in this stock, and have kind of been trading down slightly sideways channel over the last several months, really since June. Now here's a look at the moving averages, and while the lines are kind of difficult to look at, the actual visual, you can see that the red line is higher than the green, and the blue, of course, is lower. The red being the 20-day moving average, the green is the 10-day, and then the 50-day is the blue line. So this is not showing a clear signal with the moving averages. Taking a look at the 5-year, we have a totally different look at this stock. We get a sense of how far it's actually fallen. We saw an all-time high of 260 in this stock, and here we are more than, or basically we traded less than, more than $100 lower than that, and right now, we're roughly $95 less than that. So this stock has definitely taken a beating over the last, call it year and a half, almost 2 years. So moving averages, of course, you've got the, this time I'm looking at the numerical value up in the left-hand part of the screen. The 10-week is higher than the 20-week, but both are lower than the 50-week, basically an annual average. So this too is inconclusive, so not a whole lot, not a clear signal coming from the moving averages today. Let's take a look at the Fibonacci retracement. And some of you would say, wow, can you really use the Fibonacci retracement over such a long period of time, right? I'm looking at a trend that began in early 2009 and ended in basically beginning of 2018. Absolutely we can. In fact, sometimes this is very significant also from a timing standpoint. If it took 9 years for this stock to go up to that high point, and let's see, it's taken basically 2 years to come on back. Even if we look at 2 over 9, do the quick math here, that's still from a time standpoint, that's at 22%. You can actually use Fibonacci retracement on time as well. And to learn more about Fibonacci like that, you can certainly read some books, or I'm going to be coming out with a little bit of a training sometime soon that'll explain it. But these time frames are very significant as well. But the fact that it reached this 50% level here in 2019 may give us a little bit of hope in the stock that it's going to pull on higher. Now, looking at the 1-year MACD, we see that really since this crossover that happened in the overbought territory back in November, the MACD has basically been heading back lower, meaning there's bearish momentum. Now, I put less value in it because even though you had a crossover, you don't see significant movement in this stock, right? So when the MACD is moving significantly, but the actual stock price isn't, I hold less weight, give it less weight. Same over here with this, this is a 5-year MACD, and you see in this scenario, we're looking at bullish momentum, and it's from a crossover that happened back over the summertime. Once again, you've got the MACD rising higher, showing bullish momentum, but there wasn't a significant gain in the stock, so I'm putting a lot less relevance. one of the differences, if you want to see an example, you can look at what happened back here in 2018 when we had this crossover and a significant fall off in the MACD, along with, a roughly, let's see, we'll call that 40 bucks down to $240 a share down to roughly $190 a share. That was a pretty big move for this stock that coincided with the MACD. Now here's a look at, basically we're back in the 1-year chart, looking at something that could be a little bit of resistance. This is that 176 level. You can see that back in late 2018, this is the level that we bounced off of for a little bit of an up move. And then you can see as well back here in July that this price point has proved to be resistance multiple times, even got a little touch there back in November. So will it be resistance again? I'm not sure, but certainly until we break through it, it's an area to be aware of. And here is a little bit of an attempt to take a look at what seems to be a bearish downtrend. You're getting lower lows, and we haven't broken out of this channel. So definitely we'll be watching this area, this like 172-ish price range, on up to 176, which was the previous resistance. So just a lot going on in this stock. Stock's been trending lower since May of 2019, and the moving averages are inconclusive. They're kind of all mixed up. We looked at that Fibonacci retracement of the up move from 2009 to 2018, and it looks like we've reached the 50% retracement. So maybe we're going to, maybe it's time that this stock bounces and starts to recreate or continue the previous uptrend. That would be very interesting. Now, the 1-year MACD is signaling bearish price momentum while the 5-year is showing bullish. But if you look at both charts, even though there's significant movement in the MACD, there's not that much, neither signal was followed or backed up by a significant move in the actual price. So this would also be a bit less conclusive or more inconclusive. So overall, 3M stock appears to be in a little bit of a downward price channel. You have clear resistance at 176, and if we were to get through that resistance point, I actually will look for this stock to fill in that gap that was created with that bad earnings. It might take a strong earnings update for this stock to get that pop, but we saw a top of $260. Don't put it beyond 3M to reach back higher and at least fill the gap up to $220 and possibly even create a new high. The biggest issue is the time frame. So I'm not saying to go out and buy the stock right now. I'm just saying there are some levels that need to be reached, and if we are to reach past them, then I think it's going to be not necessarily to the moon, but off to the races for a little bit. So that's it on 3M. Thank you guys so much for listening. Again, if you would take a moment and hit the subscribe button to join the list of subscribers to this channel. Thanks again for watching. Happy trading.